All right, trade recap for a no news Monday here on the Nasdaq. We have a lot to talk about, and I mean a lot. This is a really educational day. Like you're gonna learn a lot from this trade recap. So let's get into it. First things first, I didn't take any trades on any funded accounts. They were all fresh sets of evals that I just got. I just started copy trading multiple prop firms. I got some top set, my fund and futures accounts, and yeah, I took my executions on those. So let's just kind of start before the market opened, and let's kind of see what I want to see for the day. So first things first, let's start on the higher time frame. Okay, on the 4 hour, don't mind this. Pretend this hasn't happened yet. Let's just go to 6 a.m. Whatever. Okay, so overnight we had created this balanced price range, this hourly balanced price range, as you can see. Okay, we have these large gaps unfilled. Okay, came back down into this order block, reacted bullish off of it. Okay, and then came back further down, right? Got that bullish reaction. Market was about to open. Here's what I said I wanted to see for the day. Most of our prominent draws were taken, all the lows. We just had London highs. Okay, London highs were remaining, and they were taken pre-market on ES, as you can see right here. So let me kind of explain what I want to see for today. This is a position tool that I drew out in my pre-market analysis that I do for free in my Discord, by the way. Join link in bio. I said that in order for us to see shorts, I would not want to see this level broken, which is this liquidity pool right here on the 5-minute. Okay. Also because it's close to the CE of our bounce price range. Okay. I said I want to see us take London highs, not break this liquidity pool up here on the 5-minute and pass the CE of the bounce price range in order for me to confirm shorts. I said the only way I would hop in a long position is if it was a low time frame scalp, since against a sun evals, I wasn't taking it so seriously, or if we broke this high, came back down for a retrace and moved higher. But essentially what I wanted to see was price come up here in between this range and then come down to these lows over here, right? I kind of just dragged the position tool. I wasn't really accurate with it. I probably should have been, because, you know, aura farming on fucking on YouTube, because our next drawn liquidity is all the way down here, which we're not gonna fucking have enough volume for because it's a no news Monday. We're not moving 150 points without any news. It's just not gonna happen. It's very rare that it does. So let's talk about the market when it opens. So first things first, we had those London highs taken on ES, right? As you can see right here. Moving on to the 5-minute time frame, here's what I kind of saw. All right, we had insane bullish structure and a bullish reaction off of this 1-minute gap. So I did want to hop in a long position right here, set my stops under this wick and target London highs, right here. But it would have been a negative R, so I didn't actually hop in that trade, right? I did hop into something else though. I took 3 trades today, and that technically breaks my trading plan, but not really, because the first one was like super low risk. It was fine. Super low risk. So that's fine. Let's talk about the executions that we have on screen. All right. We came back up and formed this bearish SMT. All right. So we also formed a bullish SMT. All right. And when you have, as you can see, this is the SMT down here, and then right here on NQ. When you have opposing SMTs, the only factor that determines which way you're going is the market structure. And let's take a look at the 5-minute here. What was our market structure looking like on the 5-minute? We broke structure towards the upside. Okay, that's just telling me that we want to keep moving higher. Okay, and I want to target this level right here that I had marked out pre-market. Okay, let's talk about the entry. We came up here after filling up this 1-minute fair value gap, had a bullish reaction out of it, displaced towards the upside. However, I missed my entry on that, which sucks a lot. That's what I really wanted. I really wanted to get that entry. I don't really remember why I missed it. I think I was just like talking to my chat or something like that. And I took a position when we came back down here. I set a limit order. Okay, I set a limit order using golden fib at 778 right here, right? Because if you take a look at golden fib. Lines up with the most lower part of, what's it called? Most lower part of the golden pocket. And I want to target either these highs up here or here. I didn't even get a chance to decide because it got immediately taken out, as you can see. Let's actually pull it up on the screen. Yeah, got taken out. Okay, let's keep talking about market structure. Okay, and keep a close eye on ES as well, because there's a lot to learn here. After we came back down, we had formed a 1 minute bounce price range. Okay, I'm just gonna remove my executions just because there's a lot of stuff on the screen. We formed a 1 minute bounce price range right here on ES, right, with these. Okay, I marked it out and I said, all right, now I'm looking for shorts. If we come back up into this bounce price range and get a bearish reaction, it's signifying to me that we want to be taking a short position. All right, because now we've broken structure towards the downside, telling us that we manipulated up after accumulating, like this is our accumulation range right here, this box, manipulate up and then distribute down to these lows over here. Okay, that's our power 3 AMD rule right there. And that's the confluences I use to take trades. Let's move this tool as well. You guys already know I'm aura farming with that. So let's talk about the next trade. Here we go. So we came back down, right? Came up in ES, as you can see, filled the part of the bounce price range, and we displaced lower, as you can see right here in this 1 minute candle. Came back in up into this 1 minute fair value gap, displaced lower. Same time we came up into the bounce price range on ES, displaced lower. Okay, I took my trade on the closure of this 1 minute bearish candle right here. I kind of messed up my entry a little bit. Like I got a little bit higher, which is like a good thing actually. But the reason I did that is because since I'm copy trading multiple prop firms, I'm using Topstep X as one of them. So I have to execute manually on Topstep X, which I got the entry on Topstep, but it wicked up a little bit on ES, which is just fine. I set my stops above these highs over here and waited for the trade to play out. We came up into the bounce price range on ES and just chopped for a bit. And I was like, okay, that's fine. We're just accumulating orders and, instigating fear within the market. So this would be a good time for me to sit in the 5 minute time frame and wait for price to do its thing. But let's talk about this little guy right here, this 5 minute fair value gap. Okay. This 5 minute fair value gap did get inversed. However, this is something that's super useful to know. It did get inversed, but it doesn't matter so much that it gets inversed if you just chop up inside of it, right? And like I said earlier, we had this external SMT as well as market structure pointing towards the downside in the higher time frame. So I was ultimately confident in us moving more towards the sell side liquidity, which is down here. This is what I was originally targeting. It was this liquidity down here all the way from previous week, right? But I then realized that we didn't have any news today, and on ES we were looking at more prominent lows, which are these lows down here. This what's the word I'm looking for? Low range liquidity, low. What's the word I'm looking for? Hold on, let me think. Low resistance liquidity. That's the word I was looking for. Anyways, so I took my entry and we chopped up a little bit in drawdown. But something that you guys need to realize is that there should be no reason for you to fear or fright when we are chopping up in drawdown. We have our high time frame confluences. We have the 5 minute breakup structure. We have the SMT divergence at the highs. We have the prominent high taken, which is London highs. Okay. We have our entry model and we have our stop loss above the most recent high and our take profit at, the next draw on liquidity. Okay. So there should be no reason for you to think otherwise, that the market is magically going to do something that you don't want it to do. Right. And we did eventually get stopped out, which is just fine. Your strategy, even if it's an A+ setup, is never going to win 100% of the time. Okay. That's something you guys also need to realize. What is a good thing though, is that we did come up, wick my level, just like I assumed we would, and then move further back down. Okay. We didn't break above it. We just wicked it. And how you know if you have a good stop loss, by the way, is if you get insane volume after it gets taken out. See this insane candle like happened after I had my stop loss taken out, right? This tells me that, okay, we are having our stop losses in the right places because that's where a lot of volume lies within the market. And if we were break above this specific level right here, right, there's a lot of sell orders, okay? Meaning that it was smart of me to not set it up here because it would have gotten taken out and I wouldn't really have a good reason to set it all the way up here. Like, it doesn't make any sense. Anyways, let's talk about the final short that I took, okay? So that first trade, very low risk. It was like 50 bucks. I don't really count it. It was more so of a scalp just so I can pass these evals. This was something that I would like take on my funded if we were to have news today. All right. Let's get into the final trade of the day. Where's our short position tool? Here we go. This one is very simple. Okay. We still were maintaining, bear structure, right? We're still maintaining bear structure, especially on ES with this gigantic move down. Now, here's something that's it has a lot to do with discretion in the market, okay? You need a lot of discretion to identify a move like this. You can't just rely on some mechanical model for you to be able to figure this out. So I know what you're thinking. Okay, extra, we broke 5-minute structure on this high right here with this closure and reacted off of this liquidity. Don't you think that we would have came back down to this like bounce price range or this accumulation range, react bullish off of it to keep moving towards HI highs? No, and here's why. Look at this insane volume on ES, okay? It's not going to happen where you get an insane displacement candle towards one side and all of a sudden it's just going to do a V shape for the next minute and just shoot back up. That doesn't fucking happen in the market. Everything in the market happens for a very good reason, okay? And I'm about to explain what made me take my entry on this trade. So first things first, I had this, what is this, 3-minute, 5-minute? Yeah, I had this 3-minute balance price range marked out, like right here, these overlapping candles. And I saw price tap into it and react bearish on this closure right here, okay? And since I'm in evals, I took the trade on this bearish candle. And I kind of just, just put in a market order to get it at a good RR and set my stops just above this 3-minute bounce price range, right? And the reason that I'm respecting this 3-minute bounce price range more than this 1-minute bounce price range, which is, or this 1-minute fair value gap, technically it's a bounce price range because you have all these overlapping imbalances right here on the bullish side, is because the higher time frame holds more power, okay? If I were to have taken this on a funded account with news as well, it would have been on this closure right here. So it would have been something like a 2R, right? But again, I'm on evals. All right. Once we had that bearish reaction off that displacement candle, that tells me that the market obviously wants to move lower, more specifically towards our next round liquidity, which is where either this candle low or this candle low, okay? Either or would have worked, and they both would have been very good trades. This is a 1 to 1.7. This is a 1 to 2.7 trade, okay? But again, I'm on evals, so I risked it for the biscuit. The reason that you could have argued that you should have taken the full trade take profit here at this low is because this right here would be a 5-minute, probably a 5-minute, right? Yeah, 5-minute order block, okay? As you can see, price taps into this 5-minute order block, reacts bullish, which tells you what? Okay, the market wants to move higher since we're currently in 5-minute upward structure, right? And especially since we didn't have news today, low probability, and we didn't have an SMT either, right? Look at this, the SMT was broken on these sides over here. But again, I'm on evals, okay? So what happened was that price came dumping all the way down to our candle low right here. I set my stops to break even once we did break that low, and then have my full take profit set at this liquidity down here. And look how the market reacts bullish again. And now we're just ranging because it's now 11 a.m., which is what usually happens at 11 to 12. We're to start moving within an accumulation range and start moving sideways like an accordion. Okay, there was a lot to learn today from the markets. I am just a little green on the day, like pretty much break even, but on my MFFU accounts, because I only traded with 5 micros for every single trade, because it doesn't let you execute more than 5 micros, and I don't want to move up to minis because I just rather take my time. And so instead of full putting these accounts, because I don't really get a good feeling within me when I do that shit, I don't really like it. I just rather take it slow. But on my top step accounts, I size pretty heavy. I mean, I'm pretty good in the profits looking at it right now. Anyways, there was a lot to learn today with the markets, and a lot of knowledge to consume, a lot of good stuff that you definitely could have learned today. If you had traded a funded today, I honestly don't really have any words for you, because if you're trading a funded account, you should treat it as your actual live capital, because it's, you know, the thing that's going to be paying for your life and the expenses that you want with your, you know, favorable lifestyle of, you know, going to Miami and fucking private jets and booze and clubs and girls and whatever you guys want. Okay, cars. In order for you to be doing that, you must only take the highest probability of trades, right? You shouldn't be taking low probability trades for no good reason. Me personally, I have the money to buy back these evals if I were to blow them, right? You probably don't. Or rather, maybe you do, but you just don't want to spend that money on evals, and would rather just take your time and pass, because all it takes is a month. You know what I mean? Like, I literally had people in my Discord that have been working with me for like a month and already have like cars and shit like that, bro. Literally had one person bought a Honda Civic Type R, which, by the way, a case study video is coming out very soon on that. And another person who bought an unmarked police car after being broke and got funded $500,000. Fucking insane stuff. But yeah, super low volatility day today, only moving around like 90 points within the Nasdaq. You know, that's just a no news Monday for you. We do have a lot of heavy news coming in this week, though. We have, I think, FOMC news minutes on Wednesday. We have PMI on Thursday, and we have Powell speaking on Friday, as well as NFP next week, if I remember correctly. I'm not entirely sure. No, we don't. I lied about that. Yeah, so we have some pretty heavy news this week. I definitely want to see a lot of volatility within these markets. As of higher time frame bias, I do want to see us, you know, continue moving up, probably, hopefully. I don't know what's gonna happen. Actually, that's a lie. Forget everything I just said. I'm not good at judging a high time frame bias, because like daily bias, like not daily bias, but like daily time frame bias, because I don't swing trade. I day trade, right? So I don't know. I'm just trying to output as much information as I possibly can. But super wiki day today. I honestly really wish I took that long here. Would have been a really nice trade to take. But yeah, we just pretty much ranged for the day. If you look at like, you know, the 15-minute, look at this, bro. We're still stuck like in this range. We had a couple of breakouts, but absolutely nothing crazy whatsoever. You would definitely like expect to see much more major moves within the markets if we were to have had news today, which we didn't, right? But today's, you know, day trading mostly took place stemming from a lot of discretionary bias. Okay, you need to be versatile in these markets and not mechanical. Okay, that's a lot of problem. It's a problem a lot of people have within day trading. They'll stick to a mechanical model and just think, okay, I'll just let, you know, my model work for me, and I'll, you know, just to go like full AI mode. But it doesn't work. You need to have your own input, because if you were able to have a mechanical model, you would just fucking set a bot to do it for you, bro. You know what I mean? Like, that's the reason that I didn't take a long position right here, because I have discretion and I've seen what has happened in the markets in recent times. If you were to have a mechanical model, it would have to literally collect data from like every single week, every single season, all types of market conditions and all that bullshit to know what's going on. Like in the past, you know, couple of weeks, I've seen the market do X, Y, and Z. So I'm going to determine my trading based off of that, right? That's why discretion and intuition as well as market experience is so important while you're day trading. Okay, it's not something that you can just kind of jump into and be like, oh cool, IFVG, I'm gonna take a long position and just fucking like sell. Like it doesn't it doesn't make sense. You know, it doesn't make sense at all. You need to be good at what you do and have an edge within it, right? But that's not even where most people fall out. Most people fall out within trading psychology, right? Like I took 3 trades today. Don't you think that I would have like geeked out and like, you know, start over trading and doing all this bullshit? No. Why? Because I've spent so much time setting myself rules to take 2 to 3 trades per day that I'm so familiar with it, and I know how much I'm risking per trade, and it's with a comfortable amount. You know what I mean? And I've just practiced it for so long that I can't be psychologically impaired since I'm so familiar with it. It's like saying that Michael Jordan stresses out when he tries to hit a buzzer beater, you know, 3-pointer. It doesn't make sense because he's known for hitting 3-point shots. Because he's so good at it. How is he so good at it? Because he's practiced it so many times, and he knows the flick of the wrist, and he knows the motion. He knows the strategy to be able to consistently hit those, you know, plays, right? Because he's practiced it and seen it happen over and over and over again. There was a lot to learn today in today's there was a lot to learn in today's trading session, honestly, bro. I really enjoyed trading this. Actually, I don't even enjoy day trading. Like, bro, once you become profitable, I promise you guys will not enjoy day trading because it's just the same repetitive shit over and over again. Ooh. Here's one really important thing as well that I completely forgot to mention. Equal lows. Okay, this is like one of the biggest reasons that I took this trade. I completely forgot to mention this. Look how there's a low right here, okay, and the same low on previous week low. Equal lows have an insane draw to it for liquidity. Like when you see equal lows, you should be thinking in your head, if the market
Connexion
starts,
perdue.
if you're story time. I started using a trade copier. Makeshift will put me on it. And for some reason, when I installed it in French, the language French. I don't know why. Then I fixed it and got it to display in English. But for some reason, there's some female that'll just start yapping in French randomly, and it scares the shit out of me. I don't speak French, by the way. I'm Canadian, but I don't speak French. God. Anyways, equal lows. Once you see equal lows, you should be thinking in your head, if the market structure is moving towards those equal lows, I should set my take profit there, because equal lows have such a strong draw on liquidity to it. I'm telling you guys, equal lows are just overpowered as fuck. It's something that I don't talk about as often because equal lows are kind of rare to see. But when you do see them, you should immediately be thinking, that's my next draw. That's my next draw. That's where I'm going to set my freaking take profit, right? That is, we had an example last week as well. I think you can watch one of my trade recaps for that. But equal lows have a very strong pull to it. That's exactly why I set my take profit to here and not here, right? Instead, I broke even here and set my full TP at these equal lows down here. Okay. Anyways, that's gonna be it for the trade recap today. It was a little bit longer than expected. If you want to know how I do and what I do it, and you know how it's able to work for me, I have a link in my bio for you to join the Discord as well as the inner circle if you're interested in that, to watch me live trade in the mornings. Have a great day. I will see you guys tomorrow. Peace.